Hey guys, Tony Denaro here. Welcome back to the channel. I sure hope that your 2023 up until now has been a profitable one. Here we are, February 6th, and we're going to talk about the roller coaster ride of BBBY. Bed Bath & Beyond soaring over 100% during the trading hours today. And then we get a shelf offering notice, a filing with the SEC after hours, and the stock plummeted. What does that mean to you as shareholders? What does it mean to the company? Is the bankruptcy risk off the table? And I'm going to just, again, talk about a couple of the risks of investing in companies that are on the verge of bankruptcy. Let's get right into the details. If you weren't watching this one today, here is this fabulous chart. Congrats to everybody who made money and got out on this one today. What a ride. Opening up at $3.11. Some volume came in late in the trading day and it ran up quick to $7.03, closing out the day at $5.86. And then in after hours, we got a notice that a SEC filing had been made, an offer for preferred shares and warrants. I'm going to talk about that with you at a high level in just a second, but that was enough to take the stock down. Right now, we're trading down 37%, and after hours at $3.70, giving back most of the gains for the day. Looking at the short interest on Ortex, the estimated short interest is 46%, the percent of free float on loans 61%, and switching over to the live short interest tab, showing that the cost to borrow average is 450% on Bed Bath & Beyond. So what is in the SEC filing that was made today? We're going to look at that in just a second, but first let's look at the press release from Bed Bath & Beyond on their website. The company today announced a proposed underwritten public offering of the company's Series A convertible preferred stock, warrants to purchase shares of Series A convertible preferred stock, warrants to purchase the company's common stock, and that the company expects to raise approximately $225 million of gross proceeds in this offering, with an additional approximately $800 million of gross proceeds through the issuance of securities requiring the holder to exercise warrants to purchase shares of Series A preferred stock. I'm going to break that down for you when we get into the filing. The company intends to use the proceeds from this initial closing of the offering, along with a $100 million increase in its FILO facility, to repay outstanding revolving loans under its ABL facility. Fancy talk for saying you guys know that they defaulted on what they owed to JP Morgan. They're going to use the money raised from this offering to start paying some of that down. In addition, it says at the bottom, proceeds from the conversion of warrants to purchase shares of Series A convertible preferred stock will also be used to further repay outstanding amounts under the ABL facility, with up to half of the conversion amounts being applied against the borrowing of the ABL facility. Now let's take a look at that filing and break things down just a little bit more to help you understand what all this means. I will put a link to that press release and this SEC filing in the video description for you if you want to read through all 50 pages of this filing. Be my guest. I'm just going to go over the highlights with you. As I mentioned, this is going to be an offering of Series A convertible preferred stock, warrants for common stock, and warrants for the convertible preferred stock. Convertible preferred stock means that it's going to be convertible to common stock. Why are they having to do this offering? Well, if you are an investor in Bed Bath & Beyond, you probably know that the company is running out of cash, and they recently on January 13th defaulted on their credit facility with JP Morgan. That is covered here in the highlighted section. That is a credit facility of over $1.1 billion, and they missed the payment on that. In addition, there's been, as you know, a lot of speculation. Did the company make its bond payments that were due on February 1st? I saw all sorts of posts on Reddit and stock twits and videos made on YouTube speculating that they did indeed make those payments. And guys, I urge you again not to go with speculation or anything that you read on Reddit or hear on YouTube until you hear from the company itself. Here it says in the filing, they did in fact not make those payments on February 1st, and they are also in default of $25 million of bond payments. But if they do miss a bond payment, there's what's called a cure period. You have basically 30 days to get those bond payments out to the investors holding those bonds, and in this case, that gives them until March 3rd to get those bond payments made. We will have to see how this offering goes, if they raise money, and if the bond payments get made. Stay tuned for further details and get your information from the company, not from speculation on Reddit and YouTube. While we're on this page, two important things to note regarding, first of all, the ABL and FILO credit facilities that the company defaulted on back in January 13th. The lender has offered them an amendment, a way to get back in good graces, if you will. But that is, as it says down right here, subject to or conditioned on the closing of this offering, or the company being able to sell these convertible preferred shares. If they are not able to sell any, they're still going to be in default, and bankruptcy will most likely happen. The second thing is regarding those bond payments that are due by March 3rd now, the cure period, the 30-day grace period. If those bond payments are not made by March 3rd, the trustee can call the entire amount of all the bonds due immediately. That's just over $1 billion that the company would have to pay, and they do not have that much cash on hand. So if for whatever reason they don't make that bond payment by March 3rd, that $25 million, that would create serious problems for the company and likely result in some sort of bankruptcy filing. So you might be wondering, why did the price of the stock plummet in after hours? Well, currently the company has 117 million shares of common stock outstanding. If this offering is fully sold through and all the convertible shares and warrants are exercised, you're going to see not only will the company raise money, which is good for them to get that debt taken care of, but the outstanding shares is going to jump to 900 million from 117 million. So yes, the company's balance sheet will be better, but that is going to be some massive dilution for people like yourselves, the common shareholders. So what does that mean to you, the common stockholder, if you're holding Bed Bath & Beyond stock? What's it going to do tomorrow, the rest of this week, the coming weeks? That is hard to say with absolute certainty. We've seen for the past 2 or 3 weeks, even with Chapter 11 looming and people knowing that they defaulted on the JP Morgan and probably defaulted on the bonds, both of which they actually did, people were still buying the stock. They still ran it up to $7, putting a little squeeze on the shorts today. The short interest is high. The cost to borrow is high. But there is this potential dilution coming up. And in addition to all that, now we got to also factor in, well, if they are successful in doing this dilution, they're going to significantly improve the balance sheet. That's a lot of factors going into play, and I can't say with absolute certainty what is going to happen in the coming days. I'm not here to tell you to buy, sell, or hold the stock. That is entirely up to you guys, up to your conviction and your due diligence. I'm here to share with you the fact-based documents that the company provided so that you can get an unbiased, unemotional understanding of what is coming, and you can understand the risks that go in with that. As far as myself, I will not be buying if the momentum is going down. If it is a day trading opportunity into some upward momentum, I might buy it for a couple of hours, but I won't be holding this stock overnight. Bed Bath & Beyond had a couple ways out of the problem that they find themselves in right now. One being Chapter 11, a complete sell of the assets. They could have raised money by selling more debt, not very likely scenario, or they could have done the path that they did right now, which is to try and do an equity raise. It is going to be really interesting to watch what happens in the coming days and weeks. I expect to get some updates on this filing because there were a lot of blanks in it, talking about the conversion rate and the offering price of the shares. So stay tuned for that. Watch the company or the SEC Edgar site for updates on that filing. In discussions on my Discord and in YouTube live streams, I actually thought the company was going to do a Chapter 11 or maybe a complete liquidation of all assets. So it is an interesting choice for them that they decided to fight for survival and do this equity raise, and I wish them much success with that. I hope it goes well. But this does highlight one of the concerns of investing in companies that are on the absolute brink of bankruptcy and holding these tickers. You get these offerings like this, or you could have got a Chapter 11 notice, and then you get a massive dump in after hours. So always keep that in the back of your mind as you're doing these trades. Understand the risks. Don't be surprised if bad news comes in after hours or sometimes in pre-market. But that is the risk you take when you're investing in these speculative bankruptcy plays. You cannot ignore the fact that the company is defaulting on things. You can't let people on YouTube, Reddit, or StockTwits tell you to ignore it, or it's bullish, or it's okay. It's never okay. There's always going to be something that happens. either a liquidation or a Chapter 11 or an equity raise as we got in this case. And in any case, whichever one of them happens, you're going to often get a major dump off in the price. So when I'm looking at these type of speculative bankruptcy plays, if I were to even get in it, I would be looking at a very small investment. I don't want to risk my entire portfolio on one play, no matter what anybody is telling me in social media. I am Tony Denaro. I want to thank you for watching. Don't forget to hit the like button on the way out the door. And if this is your first time here, please don't forget to buy and hold that subscribe button. And I will see you on the next video.
So you wanna go to